This is our Forex blog for May 6, 2011, and like most days we really want to buy the strongest pairs versus the weakest and sell the weakest ones versus the strongest. Using the currency meter, the dollar and the yen were both weak as of maybe 2 days ago. The weekly monthly trend were really weak. The yen transformed itself about 2 days ago, and it has now a daily, weekly, monthly trend that's up. And so if you see some strength in the yen, usually within most of the time those trends continue. Sometimes, as you saw today, some weakness comes in for a while. Then when the trend strength comes back, you want to buy that currency against one of the weakest ones. At 3 o'clock, the euro was the weakest. The daily trend was down. The weekly and monthly trend, which was very, very strong, it had shifted pretty much to neutral, as you can see, in real-time weakness for most of the day. You want to short the weak euro against the stronger of the two pairs, which is the yen. Now, usually, if I see two currencies that have some strength and then weakness, and I see some strength coming back, I would personally prefer the one that has the least amount of weakness before. You can see a little bit of weakness here, then a little bit of strength, 15-minute pullback, and then some strength. So in this instance today, even though the weekly trend is just barely up and the monthly trend is still down, in terms of probability, I usually pick the one that has some strength, then the least amount of weakness between the dollar and the yen, and waiting for that strength to come back. So let's look at the euro dollar for selling. Weak euro, strong dollar. You can see obviously the euro just got killed yesterday. Anytime a market moves this much, typically you're going to have very sideways choppy action. That's why today was choppy. It came back up to the 20-day moving average and the monthly pivot level right here, hourly moving average. Major resistance areas right there. I'm going to add the new tools FX Tipping Point and Momentum Pro to the chart, and these are excellent for deciding in some cases which currencies to trade, but also for pure timing. Force equals mass times velocity. So the top one, the tipping point, shows basically the mass of the market. It was going up here with pretty decent broad-based moves on some of the bars, and with decent volatility, and then it came up here and we have a counter trend sell signal right at just absolutely major resistance. Now when that bar got hit right here, actually excuse me, I gotta sneeze. This bar right here has incredible strength. The mass and velocity is in it. And then during the next 10 minutes, a very high percentage of euro pairs are going up, dollar pairs down, but with less momentum. And then on this bar right here that actually touches the hourly, one bar after a counter trend sell signal, you can see the strength in the tipping point's gone and the momentum has slowed. So it's a pretty high probability trade anytime a super weak currency touches the hourly moving average the first time, and oftentimes even the second time. So you go short right here, either stop right above the high, and after yesterday's just absolutely crushing sell-off, it's pretty safe to assume that today's market will come down and try to test the lows. It may not, and it's not usually likely to break the lows, but it is very likely to go down there. So if you're a scalper, you might get into these trades and out, get back in again and out, get back in again and out, or if you're a longer term trader, you might have withheld during this first little pullback, and then when it came down, you had some counter trend buy signals right here, got out of that trade with about 40 pip profit. Let's say you're a scalper, you're short here, and notice as it's starting to go down, there's not a whole lot of very broad-based move. It's less than even on the way up. Initially on the first bar down, there's a lot of momentum and velocity to it, and then it kind of dries up and goes underneath the one level with a tipping point that's low. So this is not the kind of pattern you want to see when you want to find the market to collapse. So you might have got out of this trade when it went back above this bar's high right here for a small profit, out at 71, maybe in at 78. You didn't make much. Now it rallied back up on that bar right here. No tipping point strength up, no weakness. So if you were still in that trade, you were happy here. But if not, you got short again somewhere around 68 or 70. And then the next time on the way down, you can see the tipping point and the velocity of the down move are both going in harmony. And during this little sideways range right here, there's almost no strength whatsoever. At the first bar, there's a little bit of momentum to the way up, and then there's nothing. You always have to raise, or I'm sorry, in this case, lower your stop, because you know, if it goes back up, you got to get out. And then draw your fibs on that first wave down, and because the trend was so weak yesterday, it's pretty likely to go down to the fib target and eventually the lows of the day. So you can see it hit our fib target, counter trend buy signals, initially, you know, some decent momentum, but most of the time the market, you know, stalls at the first or second fib target. So you get out of half your trade there, and as it started to go back up, if you had a 50 tick chart up, you probably would have got out of your trade. Here's 330. Let's look at the euro dollar on a tick chart using our FX Scalper Pro. This tool measures all the currencies on the fastest time frames possible, tick charts, up to the second statistics on, you know, how many of them are going down versus up. And notice on the tick chart here, it's coming down, and you know, it's going sideways, and then you got a green bar right here up at 31. You know, so you might have either got out on that bar or said, all right, if it goes above that bar's high, I'm out, and you're out at 32. But it's just an incredible way of, you know, getting out of trades without giving back too much of your profit. And you can see, you know, the market exploded up. There might have been a news announcement at that time. You know, I'd be a little bit careful in selling that one. But once it breaks down underneath these two bars low again, you might have gone short again. Notice the mass and velocity are in your favor. Notice on this bar right here, it pulled back immediately. Decent mass, high velocity, you know, so shorting that was pretty decent right here. And as it's coming in and working its way down, lower containment band, counter trend buy signal. Let's look at the tick charts again. And you might have even on a tick chart, as you can see, it exploded up, pulled back, kind of went sideways, broke down right here. And anytime you kind of see this, you might have got out of half your trade there. You keep moving your stop down. Every time it makes a lower low and comes up, you know, move your stop down. That previous trade, it comes down and moves up, you move your stop down, comes down and goes sideways, you move your stop, comes down and goes sideways, you move your stop, and you know, again, you got out of that trade there. But when you're watching a tick chart and you see every bar be red or every bar be green, it's a pretty big sign, because these flip trend, you know, colors very quickly, and it's probably the fastest time frame trend tool we have. You know, the dollar had that strength. The yen had a little bit of strength. The weekly monthly trend was stronger than the dollar. Then, you know, around 3 became very strong. The euro and the Swiss were both weak at that time. Let's take a look at the euro yen and selling it after 3. Also note that, you know, the euro yen also collapsed yesterday. One of the trades you could have had last night is our Elliott two-wave system. Anytime you have a big move down and then a counter trend move up, wait for it to hit the fib targets, and that's usually a pretty decent place to go short. You got a nice little small trade right here, 40 pip trade right here, maybe a small loss right here, and then when it hit the 1.618 fib target with another one of our counter trend sell signals, you can see this one fell like a rock, about 60-70 pips. The Elliott two-wave system is a pretty high winning percentage system, and I'm going to put on the Tipping Point and Momentum Pro to show you how that can increase your timing. And the best part I personally like about it is once you're in a trade, you pretty much know within 5 or 10 minutes if the trade's going to work or if the odds are improving for you or are going against you. For example, last night when this was retracing back up right here, pretty decently high tipping point, and the momentum is mostly to the green side. So I probably wouldn't have sold that there. You know, and guess what? It didn't really pull back much. The second time up, you got a nice little double top, and you also have the hourly moving average just a pip above. And notice that the previous strength that was there, both in Tipping Point and Momentum Pro, is not here at all. Look, there's no green, there's no green. It's far underneath the white line. This is a very low risk, high probability trade, and especially when you get a double top with, you know, absolutely clear divergence like that. Let me get rid of that. You go short right here, right underneath that bar's low, with your stop right above that bar, and initially it starts to fall with decent tipping point, decent velocity on the way down, and then it kind of goes sideways here, but there's no extreme strength on either of our tools. So your initial stop might have been right above the bar's high. Once it went down and kind of went sideways like that, you might move your stop down, and always be aware of where the previous swing is and where the fib targets are. These are your fib targets. These are the Fibonacci levels that I draw each night myself. I spend about 30 or 40 minutes a night doing the Fibonacci analysis, so you don't have to. They show up on all 12 of our major dollar and yen pairs. And so this is a very high probability support area, and it's likely, to be the end of the move. And the real key to trading is smaller losses and bigger wins. So you're short around 30 and ultimately out here at 90 with a 40 pip win. Now let's say you wanted to short this next move up here. Notice pretty decently high broad-based move up. One of the bars here had a lot of momentum. Let's say, at this point you got short. Notice this bar right here. It's just not going down. You had one bar that went your way. We went short, and our stop's above the high. And then, you get stopped out with a small loss. And then on the way up here, very high, powerful strength. If this one had a daily, weekly, monthly trend that was up, we'd be looking to actually buy this. And if you did buy it, that's fine too, but keep in mind, the euro yen was just extremely weak yesterday and likely to try to continue that trend later in the day. If you bought this move right here, notice, two bars with decent tipping point, but there's no velocity behind it, right? So this is a great place to go short up here, up near the upper containment band, counter trend sell signal, counter trend sell signal. And at the time, no momentum to the way up. So you go short, and on the way down, there's pretty decent tipping point going your way. A lot of momentum on that first bar, and it kind of runs out of steam. You might have got out of half your trade there. And this is every time it makes a lower low. If you're short, you want to move your stop down above the little sideways range. And usually the hourly, if you're doing a counter trend trade, is a great place to get out of your trade. So you might get out here somewhere around 117. You're short around 44 pip win. And this is a major support area, so I really wouldn't, want to sell right in front of it, like when it rallied back up again. And notice this move up here, no strength, no strength. The previous move down had incredible weakness, and that's the main way I use it. You look at each swing, and on the way up, did it have a lot of momentum? No, it's probably going to fall. On the way down, did it have a lot of momentum? Yes. Okay. On the counter trend move up, because currencies don't usually move one way forever, on this counter trend move up, was there any mass and velocity to it? Absolutely not. That's why this trade here worked, fell 40 pips. I don't know if I would have taken the trade only for the fact that this was a support area last night, and here as well, and therefore it's possibly less likely to go through that major support. But if you did short right here, notice the red tipping point and the mass, the velocity is also there, and you get a nice little 40 pip win.